Which of the following is most likely to be the root cause of a dispute arising from a client misunderstanding their insurance policy coverage? A. Changes in government legislation. B. High insurance premiums. C. Lack of communication or clarity in the policy wording. D. Late payment of premiums. The correct answer is C. Lack of communication or clarity in the policy wording explanation. Disputes often arise when clients misunderstand what is covered or excluded in their insurance policy. This typically stems from poor communication or complex, unclear policy wording. Clear communication is essential to manage client expectations and ensure understanding. Ways the principle of natural justice that ensures both parties in a dispute have a chance to present their side. A. Summary judgment. B. Procedural fairness. C. Client-centric resolution. D. Mutual agreement. The correct answer is B. Procedural fairness explanation. Procedural fairness is a core principle of natural justice. It ensures that each party involved in a dispute is given an opportunity to be heard and that decisions are made impartially. This principle helps uphold trust and transparency in the resolution process. A client is upset because they thought their home contents were covered during travel, but the policy says otherwise. This dispute is most likely caused by A. Overinsurance. B. Policy misinterpretation. C. Policy cancellation. D. Underwriting error. The correct answer is B. Policy misinterpretation explanation. Misunderstanding or misinterpreting what the policy covers is a common dispute source. In this scenario, the client assumed coverage without fully understanding the policy terms, highlighting the importance of clear explanations and effective communication at the time of sale. Which communication technique is most effective in de-escalating a heated conversation during a dispute? A. Repeating policy terms firmly. B. Providing legal documents immediately. C. Using active listening and empathy. D. Transferring the client to another advisor. The correct answer is C. Using active listening and empathy explanation. Active listening involves fully concentrating on what the client is saying and responding with empathy, which helps validate their feelings and concerns. This builds rapport and is crucial in calming conflict and steering the discussion toward resolution. What is a common type of dispute in financial services where clients feel they were not properly informed before purchasing a product? A. Fraudulent misrepresentation. B. Underwriting dispute. C. Dissatisfaction with advice. D. Breach of contract. The correct answer is C. Dissatisfaction with advice explanation. When clients feel the advice they received did not suit their needs or was poorly explained, it can lead to dissatisfaction. This is a frequent source of dispute in the financial services industry, especially if expectations were not managed properly. While technique is typically used in dispute resolution to help parties find a mutually acceptable solution without assigning blame. A. Arbitration. B. Litigation. C. Mediation. D. Disciplinary hearing. The correct answer is C. Mediation explanation. Mediation involves a neutral third party helping the disputing parties explore solutions and reach an agreement. It focuses on collaboration and resolution rather than blame, making it an effective alternative to formal legal proceedings. If a client repeatedly interrupts and becomes defensive, what should a financial advisor do first to manage the conflict effectively? A. Provide written documentation of the transaction. B. Advise the client to calm down or leave. C. Pause and re-engage using active listening. D. Reiterate company policies. The correct answer is C. Pause and re-engage using active listening explanation. Interruptions and defensiveness are signs of frustration. The advisor should remain calm, pause, and use active listening to acknowledge the client's emotions and concerns. This helps de-escalate tension and move toward productive conversation. What is a key characteristic of a fair and impartial dispute resolution process? A. Decisions are made in favor of the client. B. Both parties are heard without bias. C. The financial service provider makes the final call. D. External legal representation is mandatory. The correct answer is B. Both parties are heard without bias explanation. Fairness in dispute resolution means that both parties have an equal opportunity to share their perspectives and that decisions are made based on facts, not bias. This aligns with natural justice principles and regulatory expectations. What should a dispute resolution professional avoid to maintain neutrality and fairness in resolving client complaints? A. Apologizing to the client. B. Taking notes during the conversation. C. Making assumptions about either party's motives. D. Offering multiple options for resolution. The correct answer is C, making assumptions about either party's motives. Explanation. Neutrality is critical in dispute resolution. Making assumptions can lead to bias and unfair judgments. Professionals must remain objective, focus on evidence, and avoid preconceived notions. During a negotiation, which strategy helps ensure both parties feel the outcome is fair and balanced? A. Offering the lowest cost solution. B. Focusing solely on legal obligations. C. Seeking a win-win outcome through compromise. D. Threatening escalation to external bodies. The correct answer is C. Seeking a win-win outcome through compromise. Explanation. Negotiation in dispute resolution aims for outcomes that satisfy both parties as much as possible. A win-win solution fosters ongoing trust and avoids further conflict. Compromise is essential to reach agreements acceptable to all. What is the first step in the internal complaint resolution process for financial service providers in New Zealand? A. Investigating the complaint. B. Acknowledging the complaint. C. Communicating the outcome. D. Gathering facts and documents. The correct answer is B. Acknowledging the complaint. Explanation. The internal complaint process begins with acknowledging the complaint, which ensures the client knows their concern has been received and is being taken seriously. Timely acknowledgement, usually within 2 business days, is a key requirement under both company policy and obligations set by the Code of Professional Conduct for Financial Advice Services. Only after acknowledgement can the provider gather facts and proceed to investigate. Which of the following acts requires that all financial service providers be registered and belong to a dispute resolution scheme in New Zealand? A. Fair Trading Act 1986. B. Financial Services Legislation Amendment Act (FSLA). C. Consumer Guarantees Act 1993. D. Financial Service Providers Registration and Dispute Resolution Act 2008. The correct answer is D. Financial Service Providers Registration and Dispute Resolution Act 2008. Explanation. The Financial Service Providers Registration and Dispute Resolution Act 2008 mandates that financial service providers must be registered on the Financial Service Providers Register (FPR) and be members of an approved dispute resolution scheme. This is essential for protecting consumers and provide accessible complaint resolution. How long does a financial advisor have to resolve a complaint internally before a client can escalate it to an external dispute resolution scheme? A. 10 working days. B. 20 calendar days. C. 30 working days. D. 40 calendar days. The correct answer is C. 30 working days. Explanation. Financial advisors must resolve complaints internally within 30 working days. If the complaint is not resolved within this time frame, the complainant can take the matter to the relevant external dispute resolution scheme. This time frame ensures timely and fair treatment under the Code of Professional Conduct and obligations enforced by the FMA. Which organization is responsible for monitoring and enforcing compliance with the Financial Services Legislation Amendment Act (FSLA)? A. Reserve Bank of New Zealand. B. Financial Services Council. C. Financial Markets Authority (FMA). D. Commerce Commission. The correct answer is C. Financial Markets Authority (FMA). Explanation. The Financial Markets Authority (FMA) is the key regulator overseeing the FSLA and other financial legislation in New Zealand. It ensures that financial advisors operate with integrity and comply with the Code of Conduct, and it has the authority to take enforcement action if standards are not met. During the complaint handling process, when should the financial advisor update the client on the progress of the investigation? A. Only when the issue is resolved. B. At the halfway point of the investigation. C. Regularly, especially if delays occur. D. After gathering all facts and evidence. The correct answer is C. Regularly, especially if delays occur. Explanation. Under good practice and compliance with the Code of Professional Conduct, clients must be kept informed throughout the complaint process. This includes providing updates if delays are expected or additional time is needed to investigate. Transparency maintains trust and shows professionalism. Under the Consumer Guarantees Act 1993, what must financial service providers ensure in relation to the services they offer? A. Services must be the cheapest available. B. Services must meet only minimal industry standards. C. Services must be provided with reasonable care and skill. D. Services must include a written contract. The correct answer is C. Services must be provided with reasonable care and skill. Explanation. The Consumer Guarantees Act 1993 guarantees that services, including financial advice, must be delivered with reasonable care and skill, must be fit for purpose, and completed within a reasonable time frame. This law protects consumers from negligence or poor service quality. Which of the following is not a key step in the internal complaint handling procedure? A. Communicating the outcome. B. Referring to a court of law immediately. C. Investigating the issue. D. Gathering relevant documents. The correct answer is B. Referring to a court of law immediately. Explanation. Complaints should first be handled internally and only escalated externally if unresolved. Taking a complaint directly to court bypasses internal and external dispute resolution schemes, which are faster, free, and designed for consumer protection. Courts are a last resort. What is one of the main functions of the Code of Professional Conduct for Financial Advice Services? A. Enforcing penalties for non-compliance. B. Setting rules for interest rates and fees. C. Establishing minimum standards for ethical and professional behavior. D. Overseeing insurance claims. The correct answer is C. Establishing minimum standards for ethical and professional behavior. Explanation. The Code of Professional Conduct outlines the ethical and conduct expectations for financial advisors in New Zealand. It sets standards for competence, care, diligence, and ethical behavior, ensuring clients receive trustworthy and high-quality advice. When documenting a complaint, which of the following must be included? A. The client's age and marital status. B. Detailed log of all communications and decisions. C. Financial advisor's personal opinions. D. The outcome before the complaint has been reviewed. The correct answer is B. A detailed log of all communications and decisions. Explanation. Maintaining a clear audit trail is a vital part of complaint resolution. Records should include dates, summaries of communications, decisions, and evidence reviewed. This supports regulatory compliance and protects both the client and advisor if issues are escalated. What role does the Fair Trading Act 1986 play in financial complaint resolution? A. It regulates court procedures. B. It ensures goods and services are accurately represented. C. It requires advisors to provide free services. D. It provides the structure for internal complaints. The correct answer is B. It ensures goods and services are accurately represented. Explanation. The Fair Trading Act 1986 ensures businesses, including financial service providers, do not mislead or deceive consumers. In complaint resolution, this act is key when the complaint involves false or misleading representations, such as exaggerated returns or risks. Which of the following situations most clearly warrants escalation of a dispute to senior management? A. A complaint that was resolved within 24 hours. B. A standard policy query about payment terms. C. A client dispute involving potential reputational damage to the insurer. D. A technical question regarding claim form completion. The correct answer is C. A client dispute involving potential reputational damage to the insurer. Explanation. Disputes that pose a reputational risk to the insurer must be escalated to senior management. Such cases may attract media attention, damage brand perception, or affect stakeholder trust, and therefore require higher level review and oversight. Which of the following is the best reason to escalate a claim to a legal team or compliance officer? A. The claim exceeds the standard settlement amount. B. There is potential legal liability or regulatory breach. C. The client is dissatisfied with the premium cost. D. The client requested an urgent response. The correct answer is B. There is potential legal liability or regulatory breach. Explanation. If a claim presents potential legal or compliance risks, e.g., breaches of law, regulations, or ethical standards, it must be referred to the legal or compliance team to ensure the company manages risk appropriately and acts within the regulatory framework. What is the primary role of the Insurance and Financial Services Ombudsman? If so, A. Represent insurers in court proceedings. B. Regulate all insurance companies in New Zealand. C. Resolve consumer complaints about insurance and financial services. D. Set the minimum standards for insurance premiums. The correct answer is C. Resolve consumer complaints about insurance and financial services. Explanation. The IFSO scheme is an approved external dispute resolution scheme in New Zealand that provides A free, fair, and independent process to help resolve complaints made by consumers against member financial service providers. A complex dispute arises with unclear policy wording and legal interpretation is required. Who is the most appropriate party to refer this matter to? A. Customer Service Team. B. Senior Advisor. C. Legal Team. D. Claims Call Center. The correct answer is C. Legal Team Explanation. Complex disputes that involve legal interpretation or unclear policy wording should be referred to the legal team to avoid incorrect decisions that could breach regulations or contractual obligations. When must a financial advisor inform a client about the option to escalate a dispute to an external dispute resolution scheme? A. Only after the insurer has denied the claim twice. B. When the internal dispute process is completed or after 2 months. C. Only if the client threatens legal action. D. Immediately after the claim is filed. The correct answer is B. When the internal dispute process is completed or after 2 months. Explanation. Under New Zealand dispute resolution rules, clients must be informed about their right to refer a complaint to an external scheme like if or RS after the internal process is completed or if no resolution is reached within 2 months. Which external dispute resolution scheme handles complaints involving financial advice in New Zealand? A. Financial Dispute Resolution Survey ARS. B. Reserve Bank of New Zealand. C. Serious Fraud Office SFO. D. Inland Revenue Department ERD. The correct answer is A. Financial Dispute Resolution Service (ARS). Explanation. The ARS is an approved external dispute resolution scheme that handles complaints about financial service providers, including those offering financial advice. It helps resolve issues independently and fairly. Why is it important to maintain documentation when a dispute is escalated internally? A. To increase administrative workload. B. For training new staff. C. To provide a clear audit trail and support decision-making. D. To allow clients to access the insurer's financial reports. The correct answer is C. To provide a clear audit trail and support decision-making. Explanation. Maintaining thorough records when escalating disputes is crucial for ensuring accountability, transparency, and consistency in handling complaints. Documentation also serves as an audit trail for compliance and regulatory review. A non-standard complaint involving policy interpretation and potential fraud indicators should be referred to A. Marketing Department. B. Compliance or Legal Team. C. External Media. D. The client's accountant. The correct answer is B. Compliance or Legal Team. Explanation. Disputes involving complex interpretations or fraud should be escalated to compliance or legal experts who are trained to assess such risks and ensure the appropriate response aligned with law and internal policies. What is one key responsibility of an advisor during an external dispute resolution process? A. Ensuring the client withdraws the complaint. B. Representing the insurer in court. C. Supporting the client by providing documents and timelines. D. Determining the final outcome of the complaint. The correct answer is C. Supporting the client by providing documents and timelines. Explanation. Advisors are expected to support clients during the external complaint process by helping gather relevant documentation, clarifying timelines, and facilitating understanding of the process without influencing the independent outcome. What is the maximum time frame for an external dispute resolution scheme to investigate and resolve a dispute in New Zealand? In most cases, A. 10 days. B. 30 days. C. 90 days. D. 180 days. The correct answer is C. 90 days. Explanation. While timelines can vary depending on complexity, most external dispute resolution schemes aim to resolve complaints within approximately 90 days to ensure timely and fair outcomes for consumers and providers.